Topics in particular show you guys, because the point of the conference today is really implementations and seeing something actually working and live, and what do we do. So this session I call Automating Trust for Capital Markets and Financial Services. I'm Michael Hiles. So I'm a lifelong technology software developer. Started on mainframes in the late 70s as a kid. A couple of notable things. I am the global chair of the working committee for the Government Blockchain Association, for the Records Management Working Committee. And then separately, my team previously in another life won a Smithsonian Award for being the very first to ever connect a judicial management system, a public court case record management system, to the World Wide Web so that you could go to a browser and do a case search. So, it was previously you had to go to the courthouse to do that, and we were kind of the first that pioneered it. And then our team also put the very first e-signature device on a judge's bench in the state of Ohio after the E-Signatures Act was passed. So those are a couple important things because it brought me to present day for 10XTS, and I see blockchain as nothing more than just a modernized version of a public record type of a system. So what is 10XTS? So we're financial technology, fintech. We're working to create solutions that enable capital efficiency and broader economic inclusion for a better future. So we're really looking to try to drive efficiencies into capital markets. So before the COVID hit, before the market collapsed, this was a slide that was in my deck for like a year and a half. And it was basically already a perfect storm of compressive disruption across capital markets already existed before any of this happened. Stagnating revenue in the financial services space, growing competition, weak returns, and then compliance is this massive overhang. Well, so how big of an overhang is it? Our first big problem that we seek to solve is capital markets operating costs experience a significant increase based on the compliance and then the poor information efficiency. In 2017, the OECD, along with the International Federation of Accountants, put out a report that said the cost of reconciling differences between financial regulations within multiple jurisdictions around the world represented $780 billion per year in cost. That's billion, almost $1 trillion a year. $750 billion a year is sunk cost in doing nothing but records management, compliance, auditing, et cetera. And in capital markets, of course, these costs are passed back to the clients in the form of fees and other overhead, which reduces returns. Second big problem is organizations are really terrible at organizing documents and information. In fact, the IDC did a study a while back that says the average knowledge worker spends about 2.5 hours a day, approximately 30% of the workday, searching for information. That's like a full work day out of a 5-day work week. Now, combine that with the fact that the macroeconomic level, China is just among one nation that is pursuing a digital currency, a digital yuan, right? The renminbi is going to be digitized. In fact, just recently, at the end of March, China launched a national blockchain network and piloted it. It's in pilot in 100 cities. Beyond that, the Bank of Canada, right? They're ready. They've laid the groundwork for a digital currency in preparation of what's coming. The euro dollar, everyone is recognizing. Forbes, they're all now talking about the digital dollar that is coming, including in the United States. We've seen drafts of the language go into the last two versions of the stimulus bills that didn't make it through, but it's certainly hotly debated. What we do know is that in 2018, Christine Lagarde, the managing director of the International Monetary Fund, spelled out her roadmap for fiat digital central bank currencies, and is working and is probably, pretty far along at this point towards the implementation of a IMF central bank-based currency that will first start with overnight settlements and then expand out from there. So what we do at 10XTS, we saw all this coming and said, well, all these token offerings and security tokens and ICOs and tokenization of assets, that's all great. What does that all really mean? And we took a little bit different approach, but we had to recognize some fundamentals. So we created essentially a financial asset system of record. Everyone wants to make blockchain into this big thing, and really it's just simply a system of record, or it's a method of record keeping for all of the information about assets and the people that are involved in them. For example, asset issuers, asset buyers, but then you have all of these other folks that are also part of any given transaction. You have the intermediaries, legal, audit, banks, custodians, regulators. All these folks are part and parcel to some role that they play in some type of transaction around an asset. Now, there's lots of different kinds of assets. There's gold, there's real estate, there's commodity food, there's money, securities, shares of a company, and even hard assets that are owned by governments, right? Well, what is an asset actually? Well, it's the physical thing, but then there's also this legal concept that goes along with an asset or an entity. These are the documents and information that, based on the jurisdiction that you're in, are the requirements to declare, say, ownership of a title, of a deed of real estate, or a title of a car, or a depository receipt, or a shareholder subscription agreement. And then also government identification, whether I'm an individual or if I'm a company, what types of information. Our approach was, instead of trying to create all these smart contracts, which is where a lot of the tokenization market went out of the gate, and then they quickly realized it was very difficult, very complicated. We realized that you can't tokenize assets until you tokenize the documents that enumerate the asset, that represent the legal language of an asset. So we built a methodology that allows us to take a real world physical document and transform it into an encrypted, encoded hash. Then we load those documents and hashes into what we call a digital vault system. And that digital vault system is essentially another hash wrapper, but it's going to be recognizable to everyone as sort of just like a folder tree, if you're storing files in a file folder. And so what then we realized was, well, we got to track who's touching these documents, who are doing things with these documents. So issuers, investors, accounting, audit, banking, intermediaries, and even regulatory compliance. Who has permission to touch this asset in these documents? And then how do we record every time somebody does something relating to those documents? How do we then log that to the network? So then this allows us to collect all kinds of asset market and transaction data, including secondary market buy sell pricing for price discovery and velocity, and being able to run all sorts of future state AI around the data that we're capturing on the network. This is extended because it's not just about the blockchain, it's really about connecting it to the real world. One of the mistakes we saw being made in the blockchain space early on was people were trying to build and completely rewrite and re-engineer entire line of business applications based on just the fact that blockchain now exists, and we've somehow or another got to accommodate this process. So we recognize that that was sort of silly. Why don't we just figure out ways to bolt the blockchain onto the existing workflows, existing line of business applications, and just simply capture those documents and that data as it comes out of some other workflow process that people are doing inside of their jobs every day, whether that's a bank underwriting a loan, whether that's a transfer agent processing the transfer of the sale of a stock certificate. So once we bundle up all of that data and that information and wrap it in these microservices, now we're in a position to ultimately connect directly to whatever digital dollar ecosystem emerges at the banking level, at the asset management level. We now have a system of record that can bolt on, and we don't particularly care whether that's Bitcoin, whether that's Ethereum. It doesn't really matter to us. We're less focused on the blockchain itself, as opposed to, once again, attaching all of that secured, all those secured documents, all that secured data, hashing that, and then attaching those documents immutably to the blockchain ledger, as opposed to trying to design the blockchain. It kind of doesn't really necessarily matter to us. So real quick, this is one of our taglines. Are you ready for the digital dollar? Are your assets prepared for a digital dollar ecosystem? It's coming a lot faster than what people anticipated, particularly with the language being jammed into the draft of the stimulus. It really woke a lot of banks and a lot of folks up to the fact that, oh, this is real. Oh, this is really happening. Oh, this is happening heck of a lot faster than what we thought it was going to be. And even myself being in the industry and completely exposed to all that's going on, it's a big wake up call for us to realize that where we thought we'd be in 18, 24 months is like now. It's like literally upon us right now. So before I show you guys the actual platform, I wanted to shamelessly self-promote, as if this whole thing hasn't been just a big infomercial for 10XDS, but hopefully you got some value out of some of the concepts that I'm talking through here. But part of our marketing for 10XDS is we have a podcast that we just launched called The Digital Dollar. We went to market back at the first of the year, and we had already started talking about promoting through webinars and podcasts. And when this hit, my colleague, Jonathan Deaver, and I, Jonathan was former state rep of the Ohio House of Representatives and was the chair of the Financial Institutions Committee. So he was the state banking regulator, so to speak, and worked with the Division of Financial Institutions, very tightly connected. And we bring in a heck of a lot of great interviews. In fact, we had Congressman Davidson on earlier this week. And literally between these two sessions today, I had my morning session, and then this afternoon session, I recorded a podcast with Max Shumba, who is Zim First Party presidential candidate for the entire nation of Zimbabwe, who's now looking at implementing monetary policy reform and fiscal reform through an electronic blockchain-based currency model. So it's really an exciting time, and we're just fielding calls right and left from banks in particular, are now very concerned about the moves that the Fed and the Treasury are making, and where do those guys sit in the entire food chain ecosystem. They're recognizing the need for, we've got to create new value add to stay relevant in a business ecosystem, because they are starting to feel the panic and the pain of basically being disintermediated out of the payment side of things in particular, which is a massive portion of banking business. So, all right, so I'll transition over here and show you guys real quick an actual real live blockchain application in production. This is my demo environment, but we are in full production. We are a rarity in the blockchain space. We actually have customers that pay us to do things. Oh my gosh, revenue, who'd have thought? So we've survived the trough of disillusionment, and still, not out of the woods, but we feel like with the acceleration in the market right now and the fact that we've got a functional product in the space, we're in pretty good shape to continue forward. So what you're looking at is when you log in, our SaaS brand is called uVault, and that's just simply to represent the digital vault system. And you log into the digital vault system, it's exactly what you would expect to see in a document or a record management system. We have several vaults that are defined as either an asset vault or an identity vault or an entity vault, depending on the type of vault that it is. So if it's an identity vault, we can actually interface directly with KYC AML systems at the banking level. And that includes, once again, the hashing and storage and encryption of actual documents that are coming out of the bank and out of the bank process itself. So we've got caching. Should be able to see, there we go. So you can see birth certificate, SOCH, driver's license, front, back, etc. Then separately,
Michael,
yeah.
We're still on your presentation screen. I'm not sure if you, no, it's blank.
Oh, you know what? Hang on.
You might have just shared your one.
How's that?
That's better. Yeah.
Is that better? Okay, yeah. There we go. Thanks for.
You see it now, yeah.
Now you can see it. It wouldn't be a good demo if something didn't go wrong. I mean, come on, guys.
Exactly.
If it happens to Steve Jobs and Bill Gates, I mean, blue screen. So, so to back up, this is uVault. This is our application front end. This is our record management system, and you can see that we've got this tile view of vaults that are typed based on the vault type itself and what types of documents go into that vault. So we have an asset vault, we have an entity vault, right? And then we have an identity vault. So if I go into an identity vault, for example, I can go drill in and I can look at the content. And you can see I've got basically scans of these documents that are here. And I can permission those documents to do some really cool stuff. For example, I can go in here, and this is just a sample birth certificate, but we can pull this up and you can see that we've got this birth certificate. It's bogus, it's fake, but at the same time, this gives us the ability to then derive a whole bunch of information from this document. I can hash that document. So there's my wonderful little hash that's generated, and then gives it a unique document name, uploads it to the ecosystem. But then separately, I can go in and I can track, I can permission it, and then I can literally track in real time what is going on. I just viewed this document at 5:03. See, it's not posted this block yet, but you can see that here in this log, I've actually, files, that's me, viewed this birth certificate, and I can go in and I can check the ledger status, and it's going to return the block number, and it's going to return the hash of this log entry. That is shared across every enterprise ecosystem. Now, you may not be able to decode that and see who it was and derive any information, but rest assured that hash is decentralized. It is not a single source of data that can be changed, manipulated, altered. It allows us to track and keep very succinct track of who's doing what against these documents. So we'll jump back in here and look at some other cool stuff around this. So let's look at this vault here. We've got the ability to structure separate hashes. And if you know anything about blockchain, this is all tied to a Merkle tree. So when we create a vault, that's the top, right? That's the top of the hash. That's the first hash. That's the first starting point of storage of all of the subvaults and documents, everything that goes into it. This allows me to permission and then grant permission to different pieces and parts of this overall system, the structure, but not necessarily all of it. So I can simply just ask if the document exists, yes, no. So for example, just to check and see if there's a state ID on record, for example, or if there's a filing on record. This gives me the ability to just return the answers that I need without exposing the entirety of the entire the folder and the entire document set. So separately, I can go in here and I can look at disclosures, and you can see this is some wonderful lorem ipsum dolor PDF type stuff. But the other thing that we do is when you upload the document into the system, we actually run OCR against it and strip that. Then we also hash all of the extracted structured text that's interpreted off of that document, and then that's locked down. That's secured and encrypted as well. So we do a whole bunch of cool stuff, and then we have workflows and indexes and tags and all types of permissions. But what's really important is once you've completed all of the requirements for a particular asset, once that document set is complete and all of those document types that are defined by the jurisdiction have been satisfied, we can then go over onto the blockchain. And I'll show you guys, this is not what ordinary human beings would see unless you are highly licensed as a broker-dealer or as an exchange. Well, we can go in and actually look at generating tokens based on that asset. And this is where we make decisions around fractionalization. How many fractional tokens? Do we only want there to be one token? Do we want there to be 100 million tokens? Kind of depends, right, on the future and what we're trying to achieve. So this essentially allows us to generate the token on the blockchain itself. And then once that token has been generated, it goes into ultimately a portfolio management type of a view. And you can see here's that commercial paper, and here's some information about it. And then ultimately, I can drill over and I can capture trade data out of a secondary market transaction, whether that's either settling directly and manually enter the price information of the settlement in, or we can actually attach to third-party trading exchanges or asset trading environments. So you can see there's a sell order out there right now for 10 million units of this particular commercial paper tranche that was depicted over here in this particular folder, right? So in that essence, we're immutably tying all of these documents, that entire iterative body of legal evidence, we are immutably tying all of those documents to the token. And I always criticize the ICO and the STO markets as people say, well, this particular token on this ledger represents shares of stock in my company. And my immediate question was, prove it. How do you prove that? How do you immutably prove that? Right? Oh, it's stored in our contract. Uh-huh. Where's your contract? Oh, it's at the law firm. Mm-hmm. Right. I can't automate that. That's not the promise of blockchain, right? We've way undershot at that point because we can't implement it properly. So ultimately, this gives us the ability to integrate the documents. And I joke around and say, well, if SharePoint and NASDAQ had a baby, right? This is what this platform is. This is what it does. And I can further drill in. I've got some sample of trade bots that are in here, and I can show you some trading. We can automate all kinds of wonderful things. Let's see. Yeah, there's Cincy OH. So you can see, we're just trading away. This is a municipal bond for the city of Cincinnati, which I hear they may default on because of the COVID and the finances these days. But hey, for demo purposes, it's still out there moving around. There's buy-sell orders taking place in the marketplace, in the ecosystem. And you can see we're just capturing away, capturing that data. Every time something occurs, every time a trade happens, somebody opens a document, looks at a document, it's captured and it's stored and hashed right on that blockchain. Right? I can go drill right into that block, and I can go drill right in, and I can see exactly what that information was. I can pull up the mathematical hash, and if I'm permissioned properly, I can decode that and turn it back into human usable information. So this is a real production blockchain application with real customers working against it. We predominantly work with equity funds right now in the real estate and the venture capital and the equity space. We have some really cool pilots that we're looking to roll out with some municipal finance, with some cities, as well as some banking relationships are coming online. So it's been a lot of work, and we're still grinding it out. Tiny company, but a lot of people know who we are. We've got great relationships in the Beltway, DC, New York, Boston, and continue to try to move the needle here. So give it a couple of questions, give some opportunity. Let me jump back over here to the Zoom. Do we have any questions? Can I answer questions about this fun stuff for everybody?
Yes, there's a couple.
Yeah, I think Jack's going to just go through it. We do have a couple within the Whova app that I could just go ahead and read off for you.
Yeah, that'd be awesome.
All right, so any ideas about how to manage trust issues related to blockchain solutions? And then how could we encourage industries to participate, in which methods or frameworks we can archive this goal? A lot in that.
Yeah, that's a bunch to unpack, and I'll try real fast. First of all, I only trust math. Math is trustworthy to me, and the ability to integrate one set of math to another set of math, as long as there's a known set of rules and algorithmic input, that I should be able to correlate an asset that's, say, in our system, our framework, with some other system and framework. There should be enough mathematical proof to show a correlation, or they call it cross-chain atomicity or side chain pegging, or pick your term that you want to use to baffle people with $4 words. But it's really, the tether. How do you connect these two discrete blockchains against each other? Now, as far as answering the question of how to getting people to use it, user experience for blockchain, I just tell people, stop talking about blockchain. All you're doing is like pissing people off, scaring people. Don't even say it, right? Because to the average human being, it's meaningless to them. And even blockchain enthusiasts, unless you're actually coding and doing something meaningful on the code side, all you're doing is logging into an account and looking at a denominator value of some account somewhere. So it all translates back into numbers on the screen. So I think we have to keep that in mind when it comes to adoption. Now, for us, people will use our platform and not even realize it. They won't even know what it is. They won't even know that blockchain's powering it underneath, nor should they, because it ultimately doesn't matter. It really, truly only matters to engineers and attorneys that are trying to file e-discovery requests and sue people.
It's a very important point, and I totally agree with that. Yeah. All right, so what will be the main challenge of doing analytics on top of a blockchain for the financial industry? And do you foresee additional benefits compared to current centralized solutions?
Analytics are interesting. There's a rule in all of enterprise architecture land. You don't ever want to run reporting against your production environment if you can help it, because you don't want to negatively impact the performance of your production environment by running a bunch of redundant queries and trying to go grab historical research. So you know what we do? We just run Elastic alongside everything, and we just query Elastic, and it's that simple. We can go prove the chain and the efficacy of the math, but when it comes down to connecting the dots between the history, unless there's a massive discrepancy in something, the only thing that really matters is being able to query against the side logging environment, which doesn't require the depth of mathematical proof unless a judge or somebody comes along and says, no, I need to proof this out the whole way. Then you can go into the system. So as far as like logging and research and reporting and analytics, it should just be really no different than your current ETL environment for your data lake from a big data standpoint, if you're running a transformation project.
Really. I think that, I guess we have one more question. So someone asked if the digital vault was using ECDSA.
ACD. Oh, for encryption?
ECDSA.
From an encryption standpoint?
I believe so, yeah.
We're SHA-256 right now. I mean, I'm not running any elliptical curve or anything like that just yet. We have the ability to drop that in, but, to bring my guys on from a cost standpoint to go advanced and bleeding edge. Plus, we don't know what the NSF is going to come out with. There's like 50 different new math algorithms being tested and deliberated right now for advanced quantum proof math. And, so from a elliptical curve standpoint, it's just kind of overkill. Plus, we're private permission chain, so we know everybody that's firing on our environment right now. There's no reason to open it up today to a public chain environment. We believe that we will and we can, but once again, it's just a function of getting people onto the platform, using the solution itself to solve problems and justify the cost, which I think is where a lot of blockchain projects fall down and say, well, this is great as an academic, exercise, a PhD thesis, but quite frankly, who's going to buy it? Right? I have to eat what I kill as a startup and as a company. So that means I have to find ways to sell products to companies, and the efficiency conversation is good enough. Most companies manage their important stuff out of their email inbox. So having a system of record that is the single source of truth to operate out of, people say, well, why wouldn't I just use SharePoint or Dropbox and all that? Well, because it's ad hoc nature, people are all over the map. So you look at one person's Dropbox and it's going to be structured completely different from some other person's Dropbox. And so there's no document typing, there's no standardization of the information framework that allows ultimately that automation piece to come into play down the road, because everybody's working against the same playbook. Good question, so. All right. What else?
I don't see any more questions.
All right, guys. Well, we're 1 minute over.
Any questions? Ask them now.
I'm easy to find too. Hiles Files at Gmail. Michael Hiles, my Twitter, and hit me up on LinkedIn. I'm pretty easy to find. I know I frustrate these guys. They try to get a hold of me and then I'll answer at the last second. But I read everything. I'm the eye in the sky. So,
I guess we have a last minute question. Do you have competitors, and then contact with institutional investors?
So we do have one competitor that really I would say is a rubber stamp of what we do. Really bright guys. We've talked to them. Super smart. In fact, their CTO also comes from a Western philosophy phenomenology school of philosophy, which, a lot of the computer science majors that know what they're doing come from that, Husserl and, all of the epistemology of the construct of existence, so to speak. But Invenium is the company, INVENIUM, and they're really focused heavily in large scale real estate stuff, like big family office, PE, $1 billion office buildings. And so they're real expensive. They're targeting like the family office environments. whereas we've taken a little bit more of a consumer-based approach, trying to be a little bit more friendly to the small to medium-sized institutions, which is really our target. I want to be able to go into community banks and drop this in as a SaaS platform to offset the fact that they just don't have $1 billion R&D budget like BOA or BMO or HSBC or somebody like that. So I think the second question was about institutions. Do we have institutional
investors? Yeah.
We have taken on a little bit of VC. We syndicated a lot of high net worth. I have not taken on institutional investment yet. That being said, now that we're in market and we have sales and we've got a unit economic model and can actually act like a real business, this spring, summer, we had plans to go ahead and put out a priced round and start to approach the road show. We think that it'll be one of those situations where somebody will look at us, from an investment standpoint for our Series A, because it's really where we're at from a scale standpoint, and just say, how much for the whole thing. Just fine by me. Everything's for sale.
Awesome. Well, it's been a great talk.
Yeah, appreciate it, guys. Thanks for getting us in. Hopefully it was worthwhile, even though it was a quasi-sales pitch. But I think it's important for people to see what companies are actually doing in production, since we are kind of a unicorn rarity out in the wild of a company that's stuck around and survived through the trough and didn't have to blow $70 million to go out of business. We're very capital efficient, we've not even raised $1 million yet. So we've just grounded out as a small team and, catching a lot of waves right now. So it's been pretty cool.
Yeah. That's right. We wish the best for you, definitely. And,
well, we'll be hiring. If we get funded, we'll be hiring. So all you young bucks, we'll be definitely looking for folks if we can get this next round in, because I think it'll be a doozy. I keep telling people I just want to buy a bank at this point. I'm tired of trying to sell to banks. I just want to buy a bank and be a challenger bank and just get rid of everybody and get rid of everything. It's nothing but a license and an API. So that's all you need.
Yeah, for sure.
So,
awesome.
All right, guys. I appreciate it. Thank you, everybody, for attending. And if you have any questions, reach out. I'm around.
Yep.
Thank you, Mike.